Morning, guys. It's Wednesday, November 19th, 5:24 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 1 at 435 and 3/4. January soybeans down 5 cents at, down 6.5 at 1147. December Chicago wheat up 1 3/4 at 548 1/4. December Kansas City wheat up 1/4 cent at 526.5. December spring wheat down 2 1/4 at 580.5. We've got some direct payment news. Why don't we start there?
So recent trade deals may impact the likelihood of additional farmer assistance. According to the Deputy Secretary of Agriculture, Stephen Vaden, market conditions have shifted since discussions for additional aid began earlier this fall. Trade agreements with countries such as China, Pakistan, and Japan have led to significant commitments to purchase U.S. commodities. In early October, it was reported that the Trump administration was considering a farmer bailout of at least $10 billion to offset losses from trade policies. The plan was expected to be modeled after the Market Facilitation Program from Trump's first term, which provided $23 billion in aid to help farmers impacted by the trade war with China.
Let's go to a direct quote from Stephen Vaden. He was on the radio and talked to reporters, or talked to one reporter at least. He said the entire goal of any program should be to provide a bridge to 2026 and to reflect current market conditions, which thankfully have improved. Soybean prices are at 15-month highs. That's a positive, but we will need to take that new data into account as we measure the amount of aid that we can and should provide as part of our program. And then he went on to say a bunch of political stuff about the Biden administration that we don't really care about. So we know about farm payments. We've talked about these direct payments and the pros and the cons. What are the good things about farm payments? They're a Band-Aid for the farmer. They buy you another year. They buy you a bridge to another year. The bad things, a lot of people would say, outweigh the good things. It will result in continued input price inflation. And from where I sit as a market person, direct farm payments, they disrupt the natural flow of our commodity markets. So we're oversupplied right now. We've got too much corn. We've got too much soybeans. We've got too much wheat. When prices are low, the market's function is to discourage production. That's how markets typically work. And then, we'll kind of rebalance the scales once production has been discouraged. In this instance, when the farm payments come into play, the U.S. government is subsidizing farmers to grow crops that don't make money. And it disrupts the natural cycle of the markets. And it makes it a lot more difficult for things to come back into balance, because we're going to go and produce a whole hell of a lot of these crops, even though they don't make money, even though there's no real incentive. To go back to the payments and some of the details and how this might work, I have no idea how it's going to work, but my feeling is that they're probably going to use the wrong things, the wrong metrics, to figure out whether or not these payments are needed and where they are needed. Where has the impact been now of tariffs? So the soybean market futures, soybean futures have rallied, and they're the best they've been in 17 months or whatever. Soybean basis is a different story. Basis is the difference between cash and futures, and the cash market in places like North Dakota, where the PNW is their big market, it's still very, very poor. This was the cash bid sheet from North Dakota yesterday. $1 to $1.50 under the board for soybeans. So you're still talking cash prices in that like 10 to 10.50 neighborhood in the Northern Plains, in the markets that were impacted by lack of Chinese business out of the PNW. So they're still $1.50 below production cost. So I feel like they may go about this the wrong way and say, oh, the board's rallied, it's back to pre-trade war levels. It's all well and good. And this is not me pushing for payments or anything. I feel like if I had to guess, I think they're still going to do something, but maybe it'll be kind of limited relative to what we had thought, pre-trade truce or whatever you want to call it. But my fear is that they go about it all wrong. We'll see what happens.
The USDA reported a flash sale of 29 million bushels of soybeans to China yesterday. Given the 9 million bushels of Chinese purchases announced last week via flash sales, we can now confirm that China has purchased roughly 38 million bushels, 1 million metric tons of U.S. beans in recent weeks.
Okay, so the sales were confirmed by USDA yesterday. These are the very same sales that we discussed that were rumored and publicized by the major news outlets on Monday. So now back to our China soybean purchase tracker. I had to reduce the number because the flash sale was actually not as big as what we had thought. Now, I would not be surprised at all to see an additional flash sale reported today or tomorrow or sometime later in the week. The market's acting that well that I feel like there was more than 1 million metric tons of business done, but that's what I have to go off of right now. So we're going to call it 8.5%. It was kind of a buy the rumor, sell the fact type thing. So right before USDA confirmed the stuff that was rumored, soybean market peaked yesterday, and then it sold off. Now, make no mistake, the market is we're still in uptrend territory. The technical uptrend remains intact. The market's acting very, very well. And I would probably argue is acting as if there is more business on the way, or maybe there even has been some more business done. But we can only confirm at this point that China's hit, 8.5% of that 12 million metric ton target. And the target is just something that was outlined by the White House. It's not, it doesn't mean that the market has to go up or down. It's just something that we're kind of playing with here.
The CFTC will resume publishing its commitment of traders data today. The last report was released during the final week of September, prior to the government shutdown. The temporary absence of the reports limited market data for traders and contributed to caution in taking large positions. The resumption of the reports will improve market transparency and offer greater insight into potential future price movements. This afternoon's report will cover data originally scheduled for publication on October 3rd.
CFTC released a schedule, and I know this is small. Maybe you guys can't read it if you're watching, but they're not going to be totally caught up with regard to commitment of traders data until late January. And I consider this to be incredibly frustrating in the age of things like electronic account statements and spreadsheets and fast data and the blockchain. I mean, this is a process that should probably take less than a week, and it's going to take them 2 months to play catch up. It's frustrating to me because I feel like this is data that we need to navigate the markets. I want to know where the funds are. I want to know where the commercials are. I want to know how different groups of traders are positioned in the marketplace. The private groups are still throwing estimates out, but I don't know how great that they are. They're estimating that the funds were net short like 50,000 contracts of corn at yesterday's close, maybe net long 140 to 150,000 contracts of soybeans, probably still net short about 60,000 contracts of SRWE. But those are just estimates. I mean, we've gone so long now without hard data. It's very, very difficult to tell. So I feel like CFTC needs to start living in this century, but I guess we'll find out where the funds really stand by the end of January.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Fertilizer celebrity Josh Linville from StoneX was on yesterday, and he talked about the fertilizer tariffs. They've been dropped. And what is that going to mean for fertilizer prices for you guys at the retail level? Do you wait to buy? Do you buy now? Do you buy as soon as you see the first price drop? This is what Josh discussed with us in a short video yesterday. Last week, I did a corn and soybean marketing update. I advise cash sales. I break them down by crop year and percentage. If you are among the 80 to 90% of U.S. farmers that don't use futures and options in your grain marketing, what we do is for you. This is a super simple approach to grain marketing. Maybe you could benefit from some simplicity in your life. If you want to see the premium stuff, guys, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody tries to sell you anything else. Just a ton of content direct from us today. I'll be taping with Matt Bennett. We've got a mailbag section, or a segment rather, on grain marketing that's going to be out a little bit later today. Give that deal a shot.
The USDA resumed its crop progress reports yesterday. The U.S. corn crop was 91% harvested nationally through Sunday, trailing both last year's pace of 98% and the 5-year average of 94%. Notably, Nebraska's corn harvest is only 74% complete, down substantially from 97% last year. U.S. soybeans were 95% harvested, slightly behind 98% last year, and the 5-year average of 96%. Harvest is complete in Louisiana, Minnesota, and South Dakota. The U.S. winter wheat crop was rated 45% good to excellent, down from 49% during the same week last year, but slightly higher than the 5-year average of 44%.
It's not really anything very interesting here. I mean, corn and soybean harvest moving along. Winter wheat conditions. I guess they're calling that an average. It looks like it's below average to me on the chart, but we're close to average. So I don't know, nothing to see. I guess it's good to see the stuff that they're back in business. I think they stop with all of it at the end of November, and then we resume in, I think it's 1st of April.
Flooding in parts of Argentina has left many farmers unable to reach their fields, delaying planting for key crops such as soybeans and corn. Nearly 3.7 million acres of farmland are now at high risk of becoming unusable after months of excessive heavy rain. Local producers say years of low investment in drainage systems and rural roads have made the flooding much worse.
So ballpark, you're talking 5 or 6% perhaps of the 59 million acres of corn and soybeans combined that USDA projects will be harvested this cycle. So is it a huge area? No. And I had trouble identifying exactly where the area is on this map. I know we've got some viewers and listeners in Argentina. If you guys want to drop us something in the YouTube comments or shoot me an email, info@standardgrain.com, let me know exactly where this is happening, because the article didn't really detail. They said central Buenos Aires, and I even zoomed in on the crop profit map, and I didn't see anything that was crazy. I mean, yeah, they saw 126% of normal rainfall over the last 30 days. Is that enough to cause like crazy flooding? I guess it was in some areas. They're going to dry out pretty drastically the way that it looks. Half of normal rainfall expected for almost all of their corn and soybean areas over the next 14 days. So maybe that's good for them. What did cattle do yesterday?
Cattle futures were mixed. Live cattle traded $1.25 lower to 10 cents higher. Feeders ranged from 22 cents lower to 92 cents higher. Box beef prices were mixed. Choice was up $1.54 at 371.95, while select was down $1.34 at 354.95.
Quiet day in the cattle market. Could you imagine?
Oh, wild. I know. What a time to be alive.
Pretty crazy. Stock market's up a little bit this morning. The S&P's up 23. The Dow's up 70. Treasuries are mixed. Crude oil is down 77 cents, and the December WTI at 59.96. Have a great day, guys. We'll be back on Thursday.